start the recording because I will upload this to YouTube. Make sure my phone doesn't interrupt me. All right. We are still, so we got the massive gap up from yesterday, right? And I came in today swinging some put positions, waiting mostly to see what we'd get from Bassett. So literally we can see the exact moment he did using the orb strategy that we trade. Like we traded basically in this range, but these denials are all short opportunities. So the big opportunity in futures was when, if you're in the live stream with me, we shorted this all the way down from the top to the bottom of the orb. And then even on the further plummet, got stopped like that right here. Didn't quite catch the bottom. Another entry right here. I mean, it's very simple, right? You let the first 15 minutes play out. You set your ranges. Super simple, easy day on futures. I don't think there needs to really be anything further clarified upon it than that, right? The difficulty was trying to pick some option positions this morning. The things on the watch list was like VRT. We have these really excellent openings, or gap ups, I should rather say. Really strong RVOL, had like an 11 RVOL, which is the relative volume this morning. But the RSI structure was terrible pretty much across the board. So I put these on the watch list, but, into the pre-market down here, it looks great. Pre-market formation, right? And if we can get like a little bit of a sell-off into the open, kind of touch the bottom of the RSI, like what you ideally want is for this to kind of sell off, touch right there. But when we actually get the reset on the RSI, we're breaking the pre-market structure. So this isn't no trade. You can't touch this, right? When you finally do get the reset of the RSI, when you create the double, well, not even quite a double bottom, but close enough sometimes for there, you've already broken the pre-market structure. This is something you could trade. It actually becomes a great short position. But I don't typically like to fade things on days where, I'm looking for that Treasury Secretary conference to potentially reveal information about supportive monetary policy. So I wasn't very apt to take this. It is a little bit more of a textbook short, though. When you get to the overbought territory, you create the Stella top. That is something you could nibble on for a short in most markets. You could have even done it today if you weren't distracted as the news as I was this morning and you took that. I don't think there's any way I could tell you that was a bad trade. You held below the bearish EMA the whole day and you could have rode that back to the downside. Netflix was a bit harder of a setup today. Tuffy here, it's a great name to look for the upside if you're a bit cautious as the market environment. What I'm looking for is just the gap up to a new high, right? We've created this great double top here. I was trying to see if we could get a push to 1100. Now this trade at first had a great follow through, great profits. Again, this time we got the move, but it was a bit tougher to play. The big thing is that you're holding this consolidation from yesterday, so that becomes your entry, not so much the pre-market. So that's what you look for. I was late to the entry, but we did at one point have about 25-30% returns. But I decided to hold for the idea to see if we could get a push through the top of the range later in the day. Now, we ended up getting a breakdown and a stop here. But on the reattempt back to the upside, I decided an entry with some more time. To see if that could play out. We ended up getting the news from the speech and the further breakdown of SPY, which then causes me to exit that later in the day. That was simply because the greater market was kind of falling apart. My heat map wasn't holding up as well as many were pulling back from bright green opens to more of a more suppressed day. So I decided to wait for this idea to play out and we ended up chopping up for the rest of the day. I still think that if you got in, if you actually came in on the bottom here, and this is something to be mindful of if the pre-market breaks, if you could find good support like this previous to the day. I was a bit too zoomed in when I did my daily watch list and therefore was kind of late to this idea. But that's a great entry to kind of come back and kind of hold this range, pop it. Okay, on the RSI structure here, it looks really healthy. We're creating this consistent bottom here. That is something that you can go for most definitely if you're trying to look for relative strength on this name. So as soon as strength comes back in, and you also have the confluence on the The 15-minute and the 10-minute also coming into the morning, where the TTM's kind of on all time frames is kind of shifting from this bearish to bullish, like getting the confirmation of the further run to the upside. This trade on our entry was like a 25 to 30% if you went ahead and took partials near the pre-market high, which would have been the well-disciplined trader decision. I got greedy. But just to be clear, but if you took this from the bottom and you used that heavy support range, the confluence on the TTM and the reset in the RSI, you could, I believe that was like an 80 to 90% trade from the bottom there. So that was a really nice setup. The other things that are kind of catching my eye is we do have some names like TT. By the way, if you got any questions while I'm talking, guys, feel free to leave them in the comments down, in the chat section here in the Discord, or not in the Discord, but in the stage channel. We definitely can do more of an open QA. I only have so many things to talk about. We've kind of covered the macro extensively, but if you want me to talk about that, what I think about the tariffs, I typed in the chat about it a bunch. So I'm just going over individual setups here. But Take-Two Initiative is going to be really interesting. They made GTA, which is one of the most profitable video games around, and it's supposedly going to be released here soon. So if we can get like some pre-order numbers or something soon, I really like this consolidation of the lows. The problem with entering, as we have run into the past, this is a stock that has taken money from me. So we got to be cautious with it here, right? When we actually came all the way down to this 90, it stopped me out. But if you enter it here, your true stop isn't going to be until you break this 191. Remember the double candle confirmation, like this wick isn't a true stop here. But coming in here at 213, that's a 22 point stop. So you really can't take this position until you actually get the print through the high. So I'm still waiting for the actual signal there, but it's something that's on my radar. I noticed that the daily is also firing to the upside here. And the weekly also just did a flip, so it did a bullish flip here, which is really interesting. It would be better if this went from the purple to the green and flipped. That would be an A+ setup. That would be something that would be good enough for me to enter into this, even though it's not the best entry from stop-wise. That would make me want to go ahead and take a swing at it, but we don't really have that. We don't have an R over 1. So the relative volume isn't giving us the confirmation. It still just looks like it could chop a little bit longer. So, but I think it's gonna be a B setup or better if there is an actual news catalyst that could send this to all-time highs. And it's been amazingly sturdy. Think about this like the video games. Think about it like the Netflix, not affected by any of the news. If there's gonna be a recession or a depression, these types of services, they have shown historically to have lots of strength and to be good. People get depressed and they look for distractions. TV shows and video games, people don't get rid of those things because they want the distractions, right? They might end up getting rid of their Netflix eventually. Netflix thinks they can double their revenue over the next 5 years, so look for your Netflix to go up substantially. And if you play for ads, you're going to get way more ads. So that might cause other services to also raise their prices. So keep in mind, that's the main competitor. So if Netflix goes up, they all might follow it. Tesla is really interesting. Everyone complaining about Tesla, getting the big push in the overnight. This was something I was expecting. Now, granted, we made a comment that Tesla is pricing in like a 30-point move. So if you took calls here, I doubt you made anything. You know what? I say that, but we came in today with lots of puts. And, I wake up, I see the gap up this big from 26 to 44. And my premiums are fine. Like, we took L's. But I did not get slaughtered anywhere to the extent that I was expecting, which is almost immediately a short signal, to be honest. Like the implied volatility is not coming out of these contracts whatsoever when we get that massive gap up. So that raised my appetite to say, okay, I'll be a little bit of a glutton for pain, and I'm going to try some swing puts again, which is what I ended up doing into tomorrow, just in case the Trump speech was going to be a reversal after all the comments he made yesterday. Everyone's making fun of him on the social medias, on CBNC. We know this guy watches this stuff. You know, he's like a teenage girl with True Social and with X. Okay, he stares at it a lot, and he can make comments or reverse policies just based on what people say. I'm not trying to be political when I say that. To be absolutely 100% clear, right? I'm just going off what we have historically seen. Okay, so, yeah. What else? What else? Do we have any questions? Anything standing out to you guys? Anything you'd like me to go over? The one thing I keep going into these spaces and kind of having spats with people over is look at the gap here. You know, I keep talking to people on these live shows, even some fund managers, where I tell them like IWM's the thing to buy. You have a 51% outperformance from the large caps right now in comparison to IWM. Okay, and this is making a lot of people with short-term memory loss I guess that would with early onset Alzheimer's. I don't know if I should joke about that, but the other joke didn't work. I'm in a hole now. The point I'm trying to make is people have recency bias when they're saying, I need to buy the large caps and not the small caps. And then they'll turn around and preach to Warren Buffett, oh, buy when everyone is fearful. And they think this is the fear and not this. Well, let's readjust the monthly. What outperforms what? This is your IWM. Clearly outperforming your large caps over a long period of time, right? And look at this time period especially, where we can see after the 2000 crash, the major outperformance here, much larger rallies out of the IWM when compared to the S&P large caps. This is similar to what we could see now in the coming years. And I think there's an excellent argument for it. This short-term bias, I think, is going to look like obvious hindsight. Probably by the end of 2026, everyone's going to be like, "Oh, small caps are where to put your money," right? Or there's a few like mid-cap names too to maybe keep an eye on. A few hedge fund managers have sent some to me. I know there's some guys who are kind of like loading up CVS right now. They think it's really interesting at these prices. Personally, I want to see this like reclaim 71. Then I'll take a look at it. I gotta pull up this text here because there were a few other ones that I was looking at today. GDX, and then also, I mean, we just covered commodities last week, so I don't really want to get into those too much, but those are still looking really great. Like GDX, I have an alert set for this one. It's setting up like a great cup and handle here, so this could turn into a great long position. Quest Diagnostics, right? This could be like our UNH trade, which was really good earlier this year until it completely capitulated on that last earnings. Didn't even get a bounce with the market. This thing, people, why is this thing trading like it's going to zero? I did not catch up on the earnings. I kind of made the assumption that this would kind of reverse out of the hole. So I even set up like a lotto call, and then it just died. It just kept falling. So I think it's time late tonight after the wife goes to bed, I dive into this one a little bit later and see what's going on fundamentally. Or maybe I can even just have Grok pull it up. Yeah. Lukey, all of these are, well, all the ones that I do are recorded. I'm not the only teacher here, so we have other like licensed professionals. I'm not one of them, but we have licensed professionals. We have another trader, Abraham, whose username is just a new trader. If I'm present and here in my office, I'll record them, but not all of them. This one in particular is being recorded. So, yeah. And we've got lots of old videos and stuff, and even some educational videos in the educational section too. Jazz says the wild swings is where I'm struggling. Okay, yeah. I can have a strong thesis and be crushed by one stupid Trump statement. Yeah, it's been brutal. It's been a tough environment. It's been a tough environment even for short-term trades. I wish these guys would start working nights and weekends because it's really killing me with this intraday stuff. The beautiful setups and then they just fall apart. I get it, and it makes the even after the initial news, like there was multiple times today. I don't know if in hindsight if it's really going to show up on this chart just looking at historically, but like trading these crazy news candles, this is awful to try and trade. Now I actually came in and shorted this one today and then was quick to get out. But some of these candles are just wild to trade when the news comes out, right? And if you're in a trade and you get blown out and then it will force all the way back to the downside. But that's more for futures. For options, your problem is that you're going to get slaughtered so quickly on ideas that are going to end up working. And these key levels are the range of the movement is so much larger than normal that you have to be more precise than usual with your entries. And then additionally, swinging them is crazy, right? But here's the thing. When you're in these wild swings, the way you need to start thinking is, and you should always think like this, but it matters even more in this time period, because I understand that like even the trade tracker, like my win rate is definitely taking a hit in this much tougher environment. But here's the thing. The winning percentages, the wins, when we hit the wins, are a lot bigger. Like if you go back and look, or even look at like Abraham or something, like our average win's a lot bigger. So we don't have to win as much as long as when we do hit, we hit big, right? Especially on these like overnight swings and stuff like that. So you could take a hit on your win rate and it's going to feel bad because it always feels bad to lose. It doesn't matter how far up you are on your account. It doesn't matter how much money you made. It always sucks to lose money. But in an environment like this, you got to accept the fact that your win rate's going to probably drop off a bit. If you're trying to trade like your usual volume and you weren't being, heavily selective. Now, I'm kind of in a weird position where if I take like a whole day off, I feel like I'm not doing my job per se. So that becomes my own cross to bear. But don't feel afraid in your position to kind of sit on the hands or sit on the cash. But also understand that if you can trade in this environment, you could still make a lot of money. You're just going to take more losers. Okay, like coming in for this swing put position. I lost on this position. Oh, where's my arrow? I got lost. I'm lost. We get this massive gap up, and I actually only lost. I want to say I lost about 60% on my puts. That's actually not bad at all because those should have gone down 100%. Should have been 0. So although this market is very punishing for the amount the gap will run down, the implied volatility of these contracts, the premium that's built into them, is staying persistently high. Okay? And part of that is the market telling you that it doesn't really believe the rallies. There's not a lot of conviction around the rallies, and there's still a large amount of uncertainty cooked into the market. Okay, because that should definitely be done 100%. So and that also makes me say, okay, I can lose this trade probably 5 more times. And so long as I catch, I keep trying these puts to see if I get that move back to the downside with a strong position. Or even better, like this downside move down to this 509 key level, because there's these huge gaps that need to be filled. If I could catch that move, that probably pays me 300 to 400%. So I can take probably 3 or 4 times, probably 3 to 4 times. I can come in and try that position and still come out a profitable trader, right? So just start thinking about that way of think in the bets. Think in bets. That's what I'm trying to say. What's your take on hedging? Calls with puts? It depends. I mean, for like that trade setup I just talked about, I wouldn't hedge that. If you turn it into something like a spread, you're only gonna kill your returns, and you're gonna limit your upside. And for a position like that, you don't want any limit. You kind of want uncapped, and then you just put in what you're willing to lose. If you're talking about hedging stock in this environment where the gap down potential is as large as we're seeing right now, like on Tesla, I am hedged straight up with puts. Now, if you've been in the Discord for like a year or so, you'll notice that most of the time I don't actually buy puts to hedge my shares. I usually just sell calls against them to create some income. And then I'll use that income to usually buy back the share position. And I'll do it very strategically. And then if I'm more bearish than normal, I'll be pretty close to the at the money contracts. If I'm less bearish, I'll go further out the money and higher probability. But I got within a few bucks of Kava earlier this year when I sold calls against it, because that's in my share account. And that one panned out really well when the market fell. And that was one where, in hindsight, I could have even straight up bought puts. So only if I think that this stock is going to get cut more than like 10, 15%, am I going to aggressively take a put position. Most of the time, I'm going to sell calls against shares as my hedge, generate that income. If we're talking about something like a long call position, like we have leaps on VKTX, I mean, you could turn a long call position here into like a poor man's covered calls, and you could sell short-term calls against your long-term leap position, and that can serve as a hedge and also as like an income generation strategy. This is not the stock to do it with, by the way. It's just an example. This is definitely not the stock to do that with, because when it moves, it's probably going to double. But you could buy short-term puts, but you just have to. It just takes so much precision to actually buy puts as a hedge for your shares. And I will say, this year, the move is to buy puts. But in most cases, in most years, like 2024, if there were periods of bearishness, you should be selling calls and not buying puts. And you should just be looking for that just income generation, go for the higher probability further out the money calls. And if they hit, unload the shares, and then wait for a dip to buy back in. So, I mean, or buy something else. It's like, just take the L if they print. And unload them. Yeah, of course. Hopefully that was helpful. Well, guys, I mean, that's really all I got, It's a very unusual market environment. Usually there's more things to talk about, but more trading samples to go through. But a lot of these trades right now, they're very key level driven, like key level driven. They're very headline based. Our large short positions. The reason I keep going for these short positions is very macro driven. More tweets and drama for months. Yeah. I mean, Trump said that he thinks a deal in 2 to 3 weeks. And the level headed babysitter, which is the Treasury Secretary, told us earlier today it was going to be 2 to 3 years. So if you want to be conservative, you say it's somewhere in between those two estimates. And even then, you're clueless. But I lean towards 2 or 3 years. And then I would lean on that stream that we did. If you haven't seen it with Joe manages, well, actually not anymore. But he managed $1 billion portfolio up to, I believe, 6 or 7 billion at one point, even for he was an analyst. His thesis is, 3,900 if these tariffs stay on for a full year. And they said 2 or 3 years we'll have the tariff war. And they're already talking about walking it back from China. They could be trying to walk the market back. But them even doing that, in my opinion, is kind of turning over and showing your belly, So, and getting scared of the market dumping. I thought the game plan was dump the market, blame Biden, you blame it all on Biden. But it was Biden's policies. He did, it doesn't have to be right. You just blame politics, right? It's what they always do. Half the things they say, they know they aren't right. They're just playing politics, And now he's like scared to be the guy that crashes the market. To be fair, it's because of what the dollar did. Like this dollar support, and this still needs to be on the radar, but it did climb back over 99. We should actually, you know what? I should just go ahead and reset this now. All right, if this triggers, it'll send an alert that says bear mode activated to the Discord. But that's really when that cracks again, then you could see that you could see the wave of posts on X and across Instagram where everyone's like, why did the market go down when there was no news? And that'll be why. I like to look at this way. Yeah. This even broke too and then reclaimed. So yeah, let's keep an eye on this one too. And now we're going to need to break this low. So I want to keep track of this pair. And I mean, this is what it's also concerning. Yeah, you know what? We could talk about this because we usually don't talk about this. But USD versus the euro. Look at that multi-year breakout that we're getting here. Let's go and log. It's like right here. Man, massive breakout. They've now fallen back through, it seems. But we're still above it. So that's not what you want to see either. Like these moves are not good. And then I also saw news today that China created their own yuan payment plan. So like these, multi-year trend changes from Europe and USD, these movements in Forex are significant. And they need to be on your radar. If the USD actually even breaks, we want Dixie. Obviously, we want the index. But if this breaks back below, look for gold to shoot back to life. And with the nice pullback on gold, like this is probably gonna turn into a really easy trade because gold's finally got a bit of, what looks like could extend into a substantial pullback, maybe to some moving averages. But on the way down, at any point on the way down for gold, if this breaks that support again significantly, look for gold to get a massive spike back to the upside. So it'll make a move in the overnight, and then it will probably just keep rallying for the rest of the day. It'll do something like this again. Massive gap up, still rallies all day. So that'll be a really easy trade if we see DXY break below that support. But keep that on the radar too, because that's a repeat macro trade you can go for. Enjoyed the great weather. It is fantastic weather, and we've been going on some nice walks. Although I rolled my ankle the other day running up and down stairs. I'm not as athletic as I once was. Luke B says, I'm highly bearish, thinking another 10 to 20% drop if there aren't massive reversals on tariffs, foreign policy, and domestic. I think there's some long-term damage here. Yeah. No. We're down. We hit 20%. We officially went to the bear market, right? And if tariffs stay on for the next year or something, you should be looking for, you know what? Let's pivot. Let's pivot to SPIX. Let's clean this up. And zoom this out. If we're looking at this, so far we hit a 21%, right? That just puts us into a bear market. If we actually get the plunge, you should be looking for about 3,900 if the tariffs stay on for about a year, which is about a 36% retracement. If you're going for, if we're listening to experts and not just economists, Kim Carson, who was a major market maker, says 40%. Darius Dell says potential for a 50% retracement. I think that's when you're starting to get into fantasy land. I think there's enough share buybacks, pension plans, 401ks, that probably won't happen. Where that's for 50%, you probably need us to actually lose the seat on the throne for the global, currency reserve. But I think 35 is doable. I think 40 is doable, and it's not like game over. If you get down to a 50% retracement, there's a few people who are credentialed and have really good historical performance that think we could do 50%. If that happens, passive investing might be dead, and we could look to trade. It could legit trade like Japanese market and go sideways for 20 years. As there's massive global rebalancing and funds and capital flows out of the U.S. in actual long-term fashion. I don't think that'll happen. We still have the best companies in the world. There's literally no comparison, but there's still some there's an argument to be made that Germany is undervalued, and I don't want those. I guess I just need to type in DAX. Undervalued and still has upside potential as they redecentralize. This thing out of the hole could be pretty interesting. Actually, this looks way more like a V than the US did. Yeah. So that was a great dip. But even though it actually really does look like the SPY. 1 second here. Let's actually pull this up. It still lags significantly, right? The thing is, we just have better companies. And when you're just a better company, people are willing to pay more for it, and then you trade at higher valuations. So, I hear lots of U.S. investors say, oh, Europe is cheap comparative to the U.S. And I'm like, well, based on what? That people are always going to pay more for what's better. So it's you get really subjective and you get into these like weird sales pitches when you start saying that, acting like this is objectively better, right? So I don't know. I'm always kind of skeptical of that narrative because I still think we're top dog. Nonetheless, we've gone almost 40 minutes, guys. I think that's pretty good. I think we covered some good topics. I also think okay, yeah, I just accidentally put it in full screen. Yeah, of course. Thanks for coming to class. I might move this class time. I'll make an announcement. I might move class times just slightly, maybe slightly earlier, or maybe even later, because attendance is really low right now. So, but typically if we're closer to market close, it's a little bit better. I don't know. We'll play with it around a little bit. Y'all have a wonderful night. Enjoy family time and get some good rest. Okay. Night, guys.